Hi, I'm Lon Shaver, president of Silvercorp Metals. We're an established silver producer with operating mines with a long track record of profitability, and we're using that profitability to help fund our growth into new jurisdictions. And we're in the midst of building another mine in Ecuador, Domo, and aspirations to grow and build the company to be a multi-asset, multi-jurisdiction precious metals producer.
Lon, good to see you.
See you, Matt.
We're down here in Colorado Springs. The sun is out, the mood is good. You've had a few meetings already, and so what are you being asked about?
Well, I think everyone's talking about sort of the frothy markets right now in terms of M&A deals. There's been a series of them, and I guess some people have saved some up for this conference to announce this one. So certainly discussion about that, and it does come into what we're talking about, because we're out there looking at assets, and certainly some of the valuations seem to have gotten a little bit steeper and more pricey.
Well, that's what I mean. Is it frothy good, frothy bad? It's depending on what you're trying to do.
Yeah, it can be a challenge. What we have to do is look at assets where we think there's still a sort of a valuation differential or an advantage, or something that we can bring to the table to add value over and above where they might be trading right now.
And can we talk about the recent quarterlies in terms of just give us a sense of where we are corporately, cash balances, etc. Just because I want to get into the M&A bit in a second with you, as well as the build component.
Yeah, well, I think looking at the numbers, if we look back a couple quarters, we're sitting with $200 million in cash, and then we did that convertible and added 150 US to the balance sheet. And then with cash flow from operations that we haven't been investing in either China or Ecuador, we're sitting at 377 million in cash. And then on top of that, we have an investment portfolio in other companies, which has also benefited from these markets.
Right. And you've also just announced a 400 million prospectus as well.
Well, that was filing a base shelf. So that is having one of the tools in the toolbox to allow us to grow the company.
Right. And is specifically Ecuador? Or does China need a little bit of help too?
Oh, no. This would be for brand new ventures, brand new.
Okay.
No, I mean, if you look at Ecuador right now, the 240 million roughly in capital needed to build El Domo, 175 of that is to come from Wheaton as part of the stream contribution. We'd be the balance of that. And the growth that we have, the projects we have in China are fully funded out of cash flow from, as we were talking about earlier, operations that are generating healthier cash margins at current silver prices.
Right, let's get into the operations side of things, because you need to kind of take care of business before we start talking M&A game. China, in terms of production levels and payables?
Yeah, it's been, I'd say, steady as she goes for the most part. We did have an unfortunate accident at Ying this year, and really, I say unfortunate, it's always unfortunate if there's a fatality, but on top of that, one of our contractors really sort of broke a number of rules that are really against all of our principles and policies.
Right.
And so that was unfortunate, but despite that, production has been solid.
Right.
We're showing growth in our metal output, and with that, record revenues and operating cash flow numbers. So definitely with the high margin business that we have with these higher silver prices, we are delivering more to the bottom line.
Right, and that is. What have you done with the contractor? What conversations have you had with the contractor ensuring that doesn't happen again?
Well, basically, the guy who was responsible for doing this unsanctioned visit has been terminated. So he's gone, and really his concerns are going to be much greater and beyond that, because it has the likelihood of going the legal route, which has nothing to do with us. That's the authorities that would be. Following up on that.
Okay. Now, you obviously mentioned rising silver prices being achieved. That's on that. That's out of your control, and in a good way at the moment. In terms of kind of cost controls and processes and so, how are you evolving and changing the business as you look at the different assets over there?
Well, I mean, we're always looking at our costs and
Yeah.
looking at how we can manage them better. And we're going through, as we've been talking about, a bit of a transition to look at changing the way we mine, get away from the more labor-intensive ways of mining and add more mechanized mining. So with that, you end up with some lower operating costs per ton that you're delivering. But you're also giving up a bit on grade. You'll see a bit more dilution because of this more bulk mining method.
And we're obviously generating a bunch of cash, and I note that you're allocating quite a chunk to exploration and expansion in China. So can you tell us about what you're focused on there?
Yeah, well, some of that is related to this program. So with the mines at Ying, the first step was opening up with better ramp access, and we're phasing out the use of shafts. Again, it's just easier to put people and equipment in trucks and drive it right down to the face where mining is, rather than dealing with shafts, and also for getting ore out. So we're phasing that out, and the initial investments have been in getting these ramps built out, so we can get bigger equipment down.
Yeah.
And then from here going forward, as we develop these new areas of the mine, we'll be adding in ventilation so that we can get in there and mine them.
Right. Okay. Let's bounce over to Ecuador, because obviously that's the new asset in the portfolio. Some good news with regards to the kind of permitting process or confirmation of what you thought. So maybe tell us about that.
Yeah, so this is the legal challenge that was brought out by this NGO group claiming that the government hadn't fulfilled their obligations in running a proper consultation. Right. And we had always believed that it had been run properly, and now this has been confirmed at 3 levels of the Ecuadorian judiciary.
Right.
With the final one being the Constitutional Court saying that basically this case that was brought is dead and over.
Right. Okay. So what stage are we at in terms of that, the kind of build out?
Well, we've started activities really at the beginning of this year, and it was mostly site prep. If you look at what we've got in terms of the capital cost to build the mine, it's broken up into a number of different projects. We've signed and moved ahead with one of the contracts, which was early site prep and some of the earth moving related to road installation of certain sort of foundation areas. We haven't signed yet some of the other contracts, but I think we're getting close to that, and that will be a bit of a news event to go and firm up the fact that we're moving ahead, which should happen here imminently, because we've got a lot of the road areas in, and very importantly, to start this big construction project, you need much more people and equipment on site, and so we've been focused in the last months of getting a camp set up. And so that should be up and functional here within the next 30 days.
And what are the timelines that you're moving to production on?
Well, so with the camp and some of this other infrastructure established, we can really move forward with getting these other contracts signed for some of the early stripping of the pit area. And that would also be the contract for mining once we transition to mining. And then getting all of the infrastructure in for building the process plant. And the current target is to have all this ready to go at the end of calendar 2026.
Right. And how are you? I mean, looking at what's happened up in China, but how do you challenge yourself? How do you challenge these contractors? How do you continually assess what's going on, and if it's still up to spec, I guess?
Well, it's just management oversight. So, if you look at on site in Ecuador, we have people that we inherited through the acquisition. There's new people that we've hired that have been people in country, and others that have similar experience being involved in building mines or other infrastructure projects. And then we brought over a team from China. So some of the people that have been responsible for building infrastructure, like the tailings dam that we just built another one at Ying, the mill expansion at Ying. Those guys are actually living on site in Ecuador as part of the team, helping to direct things. And the one contract that I mentioned that we signed is with a Chinese consulting and contracting group that's been active in Ecuador on other mines and other projects. And so they are right now the ones working with us on this first phase. And so I'd say it's been going quite well. Okay.
Now, obviously, it's a very positive precious metal environment out there, and companies are being rewarded for it. irrespective of what they're doing, what do you think you're being valued on? Is it the cash production, the cash on hand, the new build, and the future revenues, or what?
I think it's a bit of a blend,
Yeah.
and I think we're being recognized for the fact that right now we are a silver dominant operation. North of 60% of our revenues come from silver. It's a good silver market, not a lot of names out there, and clearly, whether it's geographical factors, we trade at a discount. So it is an opportunity for people to enter the market and not pay the premium prices for some of the other stocks that are there. But we also have, as I mentioned, $377 million in cash on hand.
It's a lovely sounding bike. Right, sorry.
Break the peaceful sounds of Colorado Springs and birds and things. Yeah, so $377 million in cash, an investment portfolio on top of that. We're building a mine in Ecuador. We have another project in Ecuador, and all of that on the back of a 1.2 billion US market cap. So from an NAV standpoint, consensus NAV is 1.6, so we're trading at a discount. How one attributes value to the cash, the investment portfolio, the asset in Ecuador, and a profitable mine with a 20-year track record. I mean, not everybody is going to view those things the same way.
No, they're not. But you as management team have got to take a view as to kind of how you could drive that yourselves, not just market cap, enterprise value, but in terms of getting that PNAV component right as far as the institutional boys and girls are concerned, right? So is it as simple as more M&A, or is it as simple as just hitting your quarterlies, as guidance indicates?
Well, I'd say it's a combination. If it was just M&A, that would be challenging because you can't guarantee getting deals done. It's not a given.
Well, you've been through that, right?
As
we all have.
We've been through that,
tough.
and we've shown price discipline to not overpay for assets. So that can limit you maybe in terms of getting deals across the wire. But M&A for sure is a focus for us because we do think that as a bigger platform, and not necessarily that bigger is better, but adding a few more assets and a bit of geographic diversification, I think will bring the blended overall multiple for the package up.
Right. Yeah. Well, I think
that's one thing we're still looking at the back end.
Okay.
Ecuador is going to contribute to that. We bought that development asset at a discount to NAV because there were concerns about whether the developer could fund it and execute. So as we show that we can fund it and we show that we can execute it, we should get that re-rate on that asset. And then as we're multi-jurisdictional, China and Ecuador, we would expect that it would bring a more favorable view of investors from a valuation re-rate.
Right. I think people do view you as a company that can obviously build, produce, and deliver cash, because you've been doing that, and diversifying into Ecuador helps in terms of jurisdictional de-risking. But you're unconventional in that sense. China, Ecuador, these are perceived as not easy places to do business, but you're showing you can. Is that your USP?
I think to some degree, yes, and I think that'll be our opportunity in this market is to go into places that maybe are a bit more challenging, get a deal, and then show that we can make it work.
So get a deal at the right price, I think, is what you're aiming at. Because I think we certainly have been announced a few overpriced gigs in the last year or so, and that's potentially, and these prices are only going to get worse. Expectations are high.
Yeah, and there are some assets that we're looking at that are existing production, and of course in this environment are commanding lofty prices. But we're viewing these opportunities as immediate diversification, and given that it's an asset in production, one, it's past one of our key hurdles, which is permitting. And for development assets, that's what we're looking for. But then just given the fact it's in production and generating hopefully good margins at these prices, it's going to generate cash flow to help pay for the acquisition.
Right.
And so we're looking at those as well. And if it's just a financial trade with no future opportunity, that wouldn't be too exciting. But if we see mine life extension, potential expansion opportunity from doing what we do well, which is explore and adding ounces, which we've been doing in China now for 20 years. That would be a way that we could buy existing production, get it paid for, and then reap the benefit of that asset.
Right, and yet that's arbitrage, because obviously it's between building and operating two different things. But here's a phrase people that have been using with me for the last week or so is like, in terms of how much they would expect to pay or willing to pay for an asset. So it's all relative. It's all relative if you've got a view on what future pricing may be. If you've got a view on what you can bring incrementally in terms of exploration or expanding the kind of production profile of the company. So when you're sort of doing this DD, specifically what are the things that kind of get you going? Production seems to be one, jurisdiction seems to be another, but what else is specifically on the ops side?
Well, it's difficult, even through thorough DD, to go and make a call that, we can do this that much better than the group that's been doing it.
Yeah.
But I think the key thing is more, if this asset is non-core for the group that's selling it, they might not have been spending as much time and energy thinking about what its long-term future could look like. And so with us coming in and looking at it and saying, okay, we can spend some money, we can identify some areas to chase up on additional resources, turn those into reserves. Now you either have an extended mine life, which just improves the overall return, or if you get to that threshold, can you justify the expansion?
There's a few big transactions that happened recently, and so typically those do tend to do portfolio reviews. And do you expect to be more products, more assets available?
Well, I think it's been a steady stream.
Yeah.
A steady stream of these types. You look at the groups that that have done this in terms of Newmont, Barrick, those Tech. Yeah. So there's I think a lot of thinking about what the right sizing is and what the right assets are to have. And if you've grown the company through M&A, you've collected a number of mines that, in the end of the day, the ones at the bottom of the list maybe aren't bad mines. They're just not as significant for you as a management team to devote your time and energy to.
Yeah. They've different profiles that they're chasing, for sure, in terms of production. Your view of the market at the moment. I speak to some of the old timers who've been through 2 or 3 cycles before, and they've seen this movie. They are urging me to be cautiously optimistic, but optimistic nevertheless. But it's never a straight line up.
Yeah,
is one thing. But likewise, the cycles don't last. So make hay while the sun is shining, for sure.
Yeah.
How does that form and shape your M&A, view on M&A?
Well, first off, I share that view. I'm cautiously optimistic. I do think we're still in the early days.
Right.
That doesn't mean it's a straight line. There can be minor corrections, which could be, again, opportunities to get in or reposition your portfolio. Yeah. But there's also just really, as has always been the case, those unanticipated torpedoes in the water that can just land and put the mining sector back on its heels. So I think the key thing, and I feel comfortable about the fact that a couple years ago at this conference, meeting with investors, I didn't have to sell an acquisition on a bet that gold was going to go higher.
Yeah.
Now, unfortunately, you didn't do that deal, and gold did go higher. So it would have been a great deal to do. But at the time, it's a hard thing to sit across the table and say, if things stay the way they are, or gold pulls back, we're going to earn insufficient or negative returns on this deal. But don't worry, gold prices are going higher. I think the key thing here is to continue to build a business, have it not be dependent on prices going up, and maybe have a bit of an insurance cushion that if prices pull back a bit, that you're not going to get yourself challenged from an asset or from a financial leverage standpoint.
Yes, it's interesting. I think whether it's silver or gold, these sorts of prices look very, very exciting. But I remember 18 months ago, there were multi-billion-dollar companies, gold companies, who weren't making money at 2,000 gold. So
Yeah.
it's problematic. And likewise, 42, 43 bucks on silver looks fantastic now. But if it does, because so it has traditionally been erratic, and I buy the industrial usage, and it's a different profile now. If it does sink again, there'll be a lot of companies which just don't make money no matter what they produce. So I'm always intrigued by the thought process.
Yeah, well, no, and I think you have to be. There's things you can do to try to manage your costs.
Yeah.
But tell me where costs are going down, unless you find that key to AI or automation or something.
Yeah.
That's a real shift, a real game changer. Fuel costs, labor costs, input costs, taxation, and the government's cut.
Yeah.
Just given how all governments are struggling to fund themselves. None of these costs are going to go down. So I think you have to be in a position looking at assets that if prices do pull back, you're not going to find yourself in a position where the asset doesn't make money or doesn't support the financial leverage that you put in place to get it in the first place.
And what's your core message? Obviously, you had a stack of meetings yesterday. You're stacked for the rest of this week. Who are you meeting? What's the profile? Because we've seen this whole investor audience and new money coming in, which is great. What's your message to any of them about the future of Silvercorp?
Well, I think our story has been consistent.
Yeah.
In terms of what we've been describing, we've stuck to the game plan. I'd say we are, in the middle innings of what we've set out to do, which is to grow the company. I think we've got a strong footing to do that, and for investors to come in and get exposed to that, it's an attractive entry point. And then really just let us stick to our work and keep doing what we're doing, which is running our mines well, building, and looking for that next opportunity around the corner. There's certainly no shortage of ideas. Whether or not they're right for us or whether or not we end up being the winner on them, we'll see. But we're definitely busy on all fronts.
Well, the sun is shining, so go and make some hay.
Thanks, Matt.
Thanks.
Good to catch up.